A few days ago, Robert Kaplan, former president and chief executive officer of the Federal Reserve Bank of Dallas, warned that the banking sector crisis was far from over. According to Wall Street Journal, the former Goldman Sachs executive said the crisis is in the second or third inning, not the seventh. "I'm afraid we've got something coming that we don't fully understand," Kaplan added. Less than 4 days after the ominous warning, another regional bank is about to hit the rocks. The shares of First Republic Bank, a San Francisco-based lender, have plunged for 2 consecutive days after a late report on Monday that the bank lost about 40% of its deposits in the first quarter of 2023. According to reports, the regional bank lost around $100 billion of deposits in March as depositors scrambled to avoid getting caught in another bank collapse. Following the report, First Republic's stock dropped by nearly 50% on Tuesday and roughly 30% on Wednesday, also hitting an all-time low on the same day. The stock has fallen by over 90% year-to-date. As Silicon Valley Bank did before its eventual collapse, First Republic said it was reviewing strategic options to help revamp its ailing balance sheet on Monday. But it's not lost on depositors that 11 of the country's largest banks previously infused $30 billion in deposits into First Republic last month to stop the banking crisis from spreading. Since that did not work, First Republic advisors are reportedly trying to convince some of those banks to buy some of the ailing bank's assets above market rates. This is a last resort for First Republic. According to reports from CNBC, government officials are currently unwilling to intervene in any rescue efforts to save the regional bank. Bloomberg News also reported that U.S. bank regulators were considering downgrading their private assessments of the bank. This move could prevent the bank from being able to borrow from the Federal Reserve. While investors and analysts continue to ruminate on the health of the U.S. banking sector, the First Republic news seems to be providing some support for the cryptocurrency market. On Wednesday, Bitcoin gained over 10% and briefly regained the crucial $30,000 psychological level. Ether also moved close to reclaiming $2,000, with a 24-hour high of $1,961. Other top altcoins, including BNB, XRP, Dogecoin, Shiba Inu, Polygon, Cardano, and Solana, also recorded gains between 5 and nearly 9%. The overall crypto market cap jumped from $1.14 trillion on Tuesday with a 24-hour trading volume of $33.70 billion to $1.23 trillion on Wednesday with a 24-hour trading volume of $49.42 billion. The Crypto Fear and Greed Index jumped to 56 on Wednesday and 59 on Thursday, despite a sharp retracement late on Wednesday and increased volatility into Thursday. Analysts are crediting some of the gains to a fall in the U.S. dollar index and concerns about the debt ceiling. On Wednesday, House Republicans narrowly passed a bill that would increase the debt ceiling by $1.5 trillion while cutting federal government spending. If enacted, it would reduce funding for federal agencies to 2022 fiscal year levels, limit growth in government spending to 1% per year, and block measures like federal student debt cancellation and new funding for the IRS. All these, coupled with the increasing de-dollarization agenda and the possibility of more increases in the Fed balance sheet to prevent further bank runs, could push investors towards other asset classes, including Bitcoin and other top cryptocurrencies. According to recent reports, the leading crypto asset may be emerging as a safe haven asset, a true hedge against inflation like gold, with store-of-value characteristics. Data from Keiko, a market analytics firm, shows that Bitcoin's 30-day correlation with gold has surpassed 50% and now stands at 57%, a 2-year high. On Wednesday, the analytics firm tweeted, "Bitcoin 30-day rolling correlation with gold has surged since March and now stands at 57%, its highest level in almost 2 years." Several gold bugs have predicted that the precious metal is about to have its biggest breakout in 50 years. Gold bugs like Peter Schiff, Rick Rule, and Jordan Roydbrine, an editor and analyst at the Daily Gold, are predicting a recession and a return to QE, conditions that are very bullish for assets like Bitcoin and gold. In other news, British multinational bank Standard Chartered is also expressing some bullish sentiments for Bitcoin. According to a research note published by Jeff Kendrick, a Standard Chartered analyst, the crypto bear market has ended and Bitcoin is on track to appreciate by over 250% to a new all-time high of $100,000. The note published earlier this week reads, "We see potential for Bitcoin to reach the $100,000 level by the end of 2024 as we believe the much-touted crypto winter is finally over." The analyst explained further that the banking crisis in the United States is advantageous for the leading crypto asset. The current stress in the traditional banking sector is highly conducive to Bitcoin outperformance, Kendrick notes in the report. It validates the original premise for Bitcoin as a decentralized, trustless, and scarce digital asset. Given these advantages, we think Bitcoin's share of total digital assets market cap could move into the 50 to 60% range in the next few months from around 45% currently. A Standard Chartered analyst also believes that interest rate hikes are about to stop another advantageous event for Bitcoin and the entire digital asset space. The report reads, "The broader macro backdrop for risky assets is also gradually improving as the Federal Open Market Committee nears the end of its tightening cycle. While Bitcoin can trade well when risky assets suffer, correlations to the Nasdaq suggest that it should trade better if risky assets improve broadly." Meanwhile, the U.S. House Financial Services Committee is looking into reports of concerted efforts by regulators to restrict crypto firms and investors from accessing banking services in the United States. Tagged Operation Choke Point 2.0, a joint effort by Federal Reserve, Federal Deposit Insurance Corporation, FDIC, and other regulators to cut the cryptocurrency industry off banking services in the country. The regulators erroneously believe that the industry is responsible for setting off the banking sector crisis. They have reportedly warned banks of the danger of doing business with related firms. According to reports, the heads of 3 House committees have sent letters to Fed Chair Jerome Powell, FDIC Chair Martin Gruenberg, and Michael Hsu, acting comptroller of the currency, seeking all records of their agencies. The House will investigate reports of Choke Point 2.0 and any coordinated efforts to deny banking services to the crypto sector. The letters to Powell, Gruber, and Hsu state that crypto activities are not always risky and past events should not lead to an unwarranted manhunt against the entire cryptocurrency industry. The letter reads, "The reaction by the federal prudential regulators to fraud and mismanagement should not lead to the de-risking of the digital asset industry." Taken together, the actions of the Fed, FDIC, and OCC do not appear to be in reaction to recent events or the result of a sudden desire to protect financial institutions from risky behavior, but instead suggest coordinated strategy to debank the digital assets ecosystem in the United States. This is another event that could be bullish for Bitcoin and other cryptocurrencies, as it could see regulators back away from their crackdown on the industry.
Today's episode is sponsored by iTrust.capital, the #1 crypto IRA platform in America. We allow you to invest in your favorite cryptocurrencies without worrying about taxes. That's right, iTrust.capital allows you to buy and sell your favorite cryptocurrencies completely tax-free. That means if you invest $10,000 into Cardano and it grows to $100,000, all of your profits are tax-free. Why is it tax-free? We took the existing retirement account industry and flipped it on its head. Instead of boring stocks and bonds, you can invest in crypto. How is it secured? Through Coinbase Custody, one of the leading cold storage providers with a $320 million insurance policy to protect against theft, hacks, and loss of funds. Roll over your existing retirement account, or even start a new one from scratch. Questions? Schedule a free call with one of our crypto retirement account specialists, and they can help you discuss your options. Start your crypto IRA today and retire early, only at iTrust.capital. Click the link in the description to open a free account now.
What are your thoughts on the bullish economic and macro conditions that seem to be converging for Bitcoin and other cryptocurrencies? Do you think these events could set off the next massive rally for the crypto markets? Please drop your comments and observations in the comments section below. Also, ensure you hit the like button, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.